Good morning, everyone, or actually good afternoon. I don't know why I keep saying good morning. I think it's because I used to do my live streams in the morning, so that's why I probably say good morning. But good afternoon, everyone. Welcome back to my live stream. We are looking at today. It is Technical Tuesdays. So this is where I will break down one technical information that the market gives us or technical tool that we can use so that you can become a pro at it and you can actually use it in your trading analysis, right? So today's topic is going to be key levels. Now, the reason why I like to do topics rather than just throw in a load of information to you guys is because we need to understand each and every technical. So in these series of live streams that I'll do, I'm going to show you each and every technical and how you use it and how we can implement it into our trading strategy. If it means that you don't have a trading strategy, that is still fine, because we can, using these live streams, you can then build your trading strategy just based off the technicals by itself. Now, we are going to do a few technicals, and then maybe sometime throughout the week, we will even look at fundamental analysis as well. Because I know a lot of you guys do want to know how to trade during news, how to trade during, a crazy volatile market where fundamental traders are influencing it, right? So with today's topic of key levels, I want to explain to you guys exactly how to utilize key levels and how to trade with it, and we'll break down every single pair with key levels so that you guys can then copy or use my method of key levels so that you guys can then place trades using key levels. So we're going to go straight into the markets. Before we get into the markets, and just a quick update, guys, if you guys head down to my Instagram, if you go to my bio on my Instagram, I have a webinar which is completely free, which is on Friday. You guys might not want to miss that one out because it's everything to do with market analysis. It's only 30 minutes, so it will be only 30 minutes of your day. But in this 30 minutes, you will get almost 4 years of analysis, of learning from what I've done for the past 4 years. So I'm cramming up 4 years in 30 minutes, which is going to be quite difficult, but we are going to try. And the link for that sign up form is on my Instagram. If you go check out the link in the description below, it will be on my Instagram, so in the bio section. You can also check the story as well, it's also on my story. But other than that, also, if you haven't already, make sure you go subscribe, make sure you go like this video, because you already know that the content is going to be very, very good in detail. And this is just an insight of my academy, which I haven't launched just yet. So students normally pay one-to-ones, and then I have let them know to pre-order my academy, which is already. So if you are a student already, you don't have to pay for my academy. It's all completely free. If you are not part of my students yet, the payment for my academy is different. So at the moment for one-to-ones, I am charging £150. If you guys are interested, just message me on Instagram as well. If you guys are interested in just my academy, right, which we are building at the moment, we're still in the process of building, it will all be in my bio in my Instagram. So make sure you go check that out. The pricing for my academy will be launching hopefully by the end of March. So hopefully you guys will get an insight of that. But let's get straight into the video now, the live stream of key levels. Now, there's a few things I want to explain before we actually get into the markets with key levels. And the first thing is actually understanding how key levels work and why we implement key levels. Now, as a trader, now, when I first started placing trades, what I used to do is just basically write down higher highs and higher lows. So just areas where there was lows, areas where there was highs, right? Lows, and just kept doing this, right? At the moment, we're looking at JPY. And then what I used to do is whatever one's closest, for example, this is pretty close, I'll just remove this. This is pretty close, but I'll keep it because it is a low that's been broken. This is not that close, but this is pretty close, so I would remove this one, right? And then what I used to do is I used to highlight areas, right? If I just change the color of it, I used to highlight areas, right? So that I'm aware, because price doesn't just go in the exact point, right? Now for me, when I used to do this, it works perfectly fine, guys, right? It works really, really well. You know, we can then, you know, figure out which one's the best support, which one's the best resistance. This one's all right. We can highlight that. For now, I won't highlight it. But, you know, so this is how I used to lay out my charts, right? Now, there's some perks to this. It's not wrong, guys. If you are trading and you are analyzing the market, there's never a wrong thing, right? Imagine this is a painting, okay? You can analyze the painting in your own interpretations, and that's what I love about the markets, because someone else could show me this chart and have completely different levels, right? And for them it would work. And for me, this is what I've just put in literally within 30 seconds, right? So within the 30 seconds of me putting this in, I kind of already know, okay, we are in the downtrend, right? I can, you know, mark down, you know, a downtrend, right? Like this. We are in a downtrend. It's not the best looking downtrend, but we are in a downtrend, right? And if I just draw the kilo, there we go. And we can see that, you know, price has just broken a bit of structure because we got new lows, and also price is heading for a retracement. So what I would do then is I would try and figure out where that retracement will be. Now, based on my analysis, just example, using just purely technicals, is my trend line and my either this level kind of lines up, right? So what I'll do is I'll expect price to kind of go to this level right here and then bounce and then break these lows, because we are on a downtrend. Okay, now as a trader that is pretty good, but then where do we check for targets, right? So what I used to do is, you know, target either the previous highs, which is around here, or the previous lows, which is down here, right? And then obviously just I wouldn't draw an area for targets because I want it to be within that point, right? Within that. To be honest, we could draw an area at the targets as well. It just makes the chart very, very messy, and you guys will start to see that, you know, the chart is becoming very, very messy and is becoming very, very hard to understand. Now, if you are a trader that doesn't mind a messy chart and you can understand everything and you won't get confused, then you're more than welcome to keep this kind of, you know, this kind of analysis, right? Analysis is pretty good, but you can see that, you know, between TP1, so, you know, between TP1 and TP2 is a huge difference between the entry point, right? So if I had to enter, you know, sorry, I don't know why I've done two. If I had to enter, right, let's say at this trend line, just after that, you know, above this tape profit, start a trend line, and then targeting over here. You know, tape off of 1 is, you know, a 1 to 1, basically a 1 to 3, and then the tape off of 2 is 1 to 6, right? So it's a pretty good distance. In this example, guys, it is all right? But after a while, you'll start to have so many lines, because, you know, price creates the high lows, high highs, or lower lows, lower highs, and it creates so many lines, right, that you will just get confused of where to put your targets. For example, you wouldn't know where to put your target here, target here, target here, or target here, right? You got like 4 different targets, and you don't want to just take profit in each one of these, because you could potentially be losing money because you've taken profits way too early. So the way I'm going to show you guys, we'll be able to break down the charts, right? I'm going to remove everything. We'll be able to break down the charts in such a formal way and methodical way that you can actually do this in every single chart. So you can just anyone could just give you a chart and you'll be able to break it down very, very quickly. And it's a very, very good skill set to have, especially when you're a trader, because sometimes you just got to restart the market. Sometimes you got to look at a new market, or sometimes you just, you know, the market that you're using at the moment isn't as strong, isn't as profitable, sorry, for you. So having this skill set and having this way of analyzing the markets and using this key level strategy, you'll be able to, number one, be able to analyze every single market, and number two, you will be able to practically trade any single currency pair. And not only can you trade every single currency pair, you can dissect every single currency pair and actually use it in your favor. Okay, so just looking at this, right, what I like to do is I like to see where is price at the moment. So at the moment, prices are 188.6 or 0.702. Okay, Now, as a trader, you don't want to be trading as yourself, right? You want to trade like the big traders, right? So you want to trade like, because obviously if you're a trader, you're most likely going to do what I did previously, right? You're going to do this, right? There's no significant levels. There's no, you don't even look at price. You don't even know what price is doing. As a trader, you need to understand price, right? So first thing I do is understand this price, okay? So 188.711. And what I do is I start to look for round numbers, right? So round numbers are 0.00 or 0.5, or quarter levels will be 0.25 or 0.75. We'll get into quarter levels maybe in the next live stream, because that is a whole different ball game when it comes to trading key levels. But with this topic today of just basically round numbers, 0.0 and 0.5 is the two main numbers that you would like to use. Sometimes it won't be point, it could be 1, it could be 15, it could be 20, 10, different types of price. If you look at Euro JPY, it will be 162.500, 162.00, 162.500, and then something like gold will be 2150, 2140, 2100, right? 21,000. 2100, again 22, right? 2200, right? So it gets a bit more complicated, but based on this video, we're just going to look at GBP, JPY. By the end of this live stream, guys, you'll be able to know how to do gold or any other currency pair. So we'll look through every single one. So based on this, right, if I just scale out again, right, looking at the market, I can see that a key level will be at 189 on the dot, right? That will be a level, right? And I'm not even looking at the moment, we're not looking at what market's doing. We can actually just hide this for a second, right? Hide. This is to show you the power of key levels, right? So right now price is around here, so 189, and we'll just just for now, we'll go 189, 190. And let me make it exactly so you guys can actually see the power of key levels, because I think this is quite underrated as a trader. It's so underrated, and a lot of you guys, once you implement this into your market, you will practically be a very good trader automatically just based on these key levels. So what I like to do is have around 3 to 4 key levels. We will identify is an uptrend. If it's an uptrend, we'll do 3 and then 1 up, 3 and then 1 down if it's a downtrend. So in this case, we'll just do 5 for now, because we don't know if it's an uptrend or not. So 187. So if you guys don't know what I'm doing right now, we are currently writing a key level. So 187, 188, 189, and 190. And then again, we'll do 191 as well. Right, so this is just key levels, and these are the levels which banks use. Okay, so when you look at like Forex Factory or Daily FX or any fundamental and news articles, you'd always see that as always a round number. They wouldn't write 189.235 or 189.573. You wouldn't see that. You'll always see a round figure. Is easier for them to project what they are portraying in the markets. Okay, so if we then just show our markets now, you can actually clearly see how we've just dissected each and every channel. So like these are channels, right? I would call these channels. These are like, for me, is like train tracks, right? So every time we're in this area is a specific point. For example, let's go over here, right? Price gets to this level, consolidates and pushes up. Where does it get to? It gets to up here. Comes up, then retests that level again. Where does it go next? It then goes up. So much momentum, it goes to the next key level, right? Where does it retest? Down here. Then it comes back down. Where does it go? To down here, right? To this level again. Goes up. So you can kind of see which one's a strong level. And to make it even stronger, right, is start drawing areas around these levels, right? Start drawing areas around these levels. And you'll start to see that, okay, cool, price doesn't actually go directly at my key level. It actually goes around it, right? Again over here. Right? And then again, same thing over here. And you can see that it's a very, very strong support / resistance or supply and demand zone. Okay? Again, over here. This one's more like this. Touch So like there we go. Right? It's a bit, yeah, that's all right. And obviously you've got one down here as well. Right, now I know this also looks quite messy, but watch this, right? We're going to clean it up a little bit. So then, what I do is I figure out, okay, price is going on a downtrend, right? Do I need these high levels? Not really. I don't need it. Okay, we're going to remove it. We don't need this high level, okay? Do I need this level? Yeah, because price could just channel up all the way up here, like it did over here, right? It got to this level and then channeled all the way up to here. So yes, I will keep this level. Do I need this level? Yes, because, you know, last time price, when it was around here, it dropped to this level, right? So yes. So these are the levels I'm keeping. So 189, 190, 188, and 187. Now, as a trader, you want to now utilize these levels, because there's no point just drawing these on and you're not utilizing them, right? There's no point at all, because yes, you've now dissected it into little subsections, right? So, you know, if I highlight each area in different colors, you will get to see, let's put this as yellow. Oh, no, let's just keep that. Let's keep this, let's put this as yellow, right? Let me just clone this. Put this as, let's just make it orange. Clone this. And let's put this one as, like, I don't know. Let's put it as light blue, right? And these are the different channels, right? Now I know I'm making a little bit more confusing, but just hear me out, guys, okay? Just hear me out. And I'll just dissect everything. So we're gonna call each of these areas like zones, right? We're going to call each of these areas zones, okay? So when price is in the yellow zone, we know that it's heading to the orange zone, okay? When price is in the orange zone, we know it's heading to the light blue zone, okay? If price is in the light blue zone, we know it's heading to the orange zone. And if price is in the orange zone, we know it's either heading to yellow or blue, okay? And understanding these zones now, you get to understand, okay, cool. Price heads to the orange zone, retest the blue zone, couldn't confirm the blue zone. Where does it head to next? It goes to the yellow zone. Price is at the yellow zone, price does not want to go above the yellow zone, we know that it's going to touch the orange zone. Touches the orange zone, shows weakness, is going to touch the blue zone. Blue zone, it was too weak, creates a higher high, we know that this is going back to the yellow zone. Now price is showing strength, it goes higher, right? Comes back down to the yellow zone, we know it's going to the orange zone. Back weakness, right? Weakness in the market goes back to the yellow zone, then price breaks above it. Price comes back down to the yellow zone, comes all the way to the orange zone, could not touch the key level, but it's still in the orange zone, shows weakness, goes up, retests the yellow zone, comes back down, all the way touching the orange zone, going towards the blue zone. And that's how you can now dissect it, right? Even back here, right? Price is consolidating between orange and blue, wait for significant price to break. Price breaks the blue zone, right? We're going to wait till price gets back to the blue zone. Price goes back to the blue zone, doesn't show any weaknesses, it's quite strong in the blue zone, right? Comes out of the blue zone, keeps a double bottom outside of the blue zone, comes back up, hesitates quite a lot in the blue zone. Once it hesitates, we know that price is pushing up. Okay, cool, we're going to go to the orange zone. Price retest, it goes from the orange zone to the yellow zone, okay? And that's how you basically dissect the markets, right? So, as a trader, you want to be able to understand these zones without looking at it, right? So you want to basically understand these zones without color coordinating it. If you are a beginner, it's fine, have these on, but once you get more into trading, you will not need this, right? It clears up your chart, makes it much more better, and you get to then understand. But for now, for the basis of this video, I want to just color coordinate it, right? So now we've understood which each channel means, which each channel will go to. For example, this channel, right? We can then kind of link it to price. So if you were understanding the markets, you can say, okay, when price gets to 189, at the moment, because we're going on a downtrend, price will most likely go to 188. If price goes to 188, price most likely will go to 187, right? And so on and so on and so on. Now, how do we trade with these levels, right? So this is where we kind of scale in and actually understand the vision of the market, right? We actually understand how the market moves. So we can see, right, that every time price goes to a channel, it's quite obvious that when price enters a channel, it ends up trying to go to the next channel, okay? And likewise, when price goes into one channel, you know, it wants to come back down. And this is basically, you know, trading channel to channel. right? So I know where my targets are, I know where my entry points are. Now, my entry points will be these key levels. For example, right, news just occurred, right? If we go to the fundamental side, news just occurred at 12:30, it was CPI news, right? We look, we see great hesitations, price goes up, could not hold strength on this upwards push, price went completely down and showed a bearish candlestick, right? Most likely, because we can see, right, that price is in a downtrend, right? Price is in a downtrend. We can actually just draw it like this. The price is at a downtrend, you know, 1, 2, 3, 4 pushes to a downtrend. We're going to now wait. We're going to now wait and see, because our trend line kind of marks us really, really nicely in the orange zone, but it also kind of helps us understand, is price going to go to the yellow zone or the blue zone? So if price decides to come and break this break the orange zone and come to the yellow zone, we know that price is going to go up, retest, and then go up to the next zone, right? Likewise, if price decides to bounce off the yellow zone, we know that price is most likely going to be heading towards the blue zone. Okay, do you now see how key levels are so important, guys? So then what I can do is be like, okay, cool. There's two positions I can have. A long position above this key level, just, you know, entry above, stop loss just below the trend line, take profit all the way up to this take profit right here, which gives us a nice 1 to 3.5 risk reward ratio. Or I can do a selling just below my let me just put this round here, sell just below just at the trend line showing, and then stop loss will be just above this key level, and then take profit will be all the way down to here, or even potentially the blue area, right? So we have like a nice 1 to 6 risk reward ratio, 1 to 6.75, right? So now what I do is I'll wait till price gets to my significant key level. What does this do? Okay, why is it so beneficial as a trader? That is a very, very good question. Okay, now before we answer that question, there's a few announcements I have to make, guys, because I made the announcements at the beginning of the live stream, but I know a lot of you have just joined midway of the live stream, so the few announcements I have to make. Just wait a few more minutes, guys, and I'll answer the question on why key levels are good, right, and how we can utilize them. Okay, so the first announcement is MullaFx Academy is launching very, very soon. We are relaunching this. So this is a second launch. So the students that we had from 2 years ago, you guys get free access to the new MullaFx. I know you guys have been waiting. A lot of students of mine have also pre-ordered it, right? If you are a student already, you don't have to pay for the MullaFx Academy. Now, if you want to become a student of mine and have multiple I have so many students that are profitable. If you check out my Instagram, we have a lot of testimonials on my highlights. And if you are a student and you've already paid the one-to-one mentoring services, you will get the MullaFx Academy for free. Okay, you will have access to that, because it wouldn't make sense for you to pay again if you've already paid for my services. If you are not already a student and the launch day has already been released, right, you will not have that access. You will not have that price of being of the student price, right? So the pricing for the academy is different to the one-to-one, and I will be closing my one-to-one sessions. So everything will be headed towards the MullaFx Academy. So if you are a student, you already have direct access to the MullaFx Academy at the launch day. If you are, because basically the one-to-one sessions are the pre-order, I've already spoken to my students about that. The launch day hasn't released yet, so if you want to be my student and you want to have, just to let you know, the one-to-one session prices will be cheaper than my academy prices. So if you want to join my one-to-one services where I guide you and I mentor you and I show you basically the 4 years experience that I have and all the mistakes I've made so you don't make that mistakes, if you want to be part of that journey, DM me on Instagram and we can get started. I can hop on a Zoom call with you and we can program a tailor-made program for you, and I'll let you know the price there. If you this is before the launch day. As soon as the launch day occurs, there will be no more one-to-one mentoring. So if you are already my student as well and you're watching this, there will be no more one-to-one mentoring. It'll be all funneling through to MullaFx Academy. So everything that I've taught you guys, it'll be all in video format. There will be one-to-one mentoring on the academy, but that will be all via the academy. Okay. Number two, the second announcement that I really need to emphasize, guys, is on Friday, on Friday, 7 p.m. London time zone, I am launching a webinar. Everyone on my Instagram already knows. I am launching a webinar, and I would love to see my YouTuber supporters or my YouTube's community, to be part of this webinar. So go ahead and check out my Instagram. In my bio, I have a link where you can sign up to my webinar. It's only a 30-minute webinar, so it's pretty quick. And I'm basically going to explain to you how to break down the markets, how to analyze the markets from base level all the way to intermediate level. I'm going to do this. I'm going to try and push this to 30 minutes so that you guys can trade like me and be profitable like me, right? And if you are funded or anything, you can use these strategies to become funded as well. Now, again, this is on Friday, 7 p.m. London time zone. Make sure you sign up, because the last day to sign up is a Thursday. The whole of Friday, I'm not accepting any more people. So at the moment, we almost are fully booked, right? I'm not getting too many people. So make sure you guys go check it out. My link, my Instagram will be down in the description below. Just click that Instagram, check my bio, and just sign up there. It will literally give the date of the webinar. Now, this is an exclusive webinar to just show you how MullaFx Academy will be. And I'm not too sure if we'll have any other webinars like this. So don't miss out on this opportunity, guys. It's completely free. You don't have to pay for it. And I would love to see you guys there. Now, back to the live stream. Now, the question that I get asked is, what's the benefit of these key levels? Why can't I just not trade off, fair value gaps, or supply and demand zones, or just simple support and resistance, or any other levels, right? Number one, okay, I have to emphasize this to you guys. Number one is stay disciplined, right? Because when market is not at your key area zone, you don't need to look at this market. For example, price right now is not at my key level zone. What do? Is I move on to another market. Okay, I move on to another market in the markets, right? Number two is it gives me that confidence that, okay, when price gets this level, because this is a very, very reactive level, because fundamental traders are trading in these levels, and price basically moves in these key levels. What would happen is I will then be able to focus primarily based on just those key levels, right? Because I know that those levels are reactive. Okay, so if you are trading and you don't know where to enter from, key levels is the best place to start from. Okay, key levels is the best place to start from, my opinion, and because it gives you nice indications of when to enter and when to leave the markets. Okay, and number three, you don't need any indicators for key levels, right? Because you're trading from channel to channel, okay, from color to color, right? You don't need any indicators. You don't need anything. You don't need any other confluences. It's a great startup. I wouldn't say this is the best. This is the best strategy. Obviously, having your indicators there, having other confluences is much stronger. It's much more easier to trade like that. But if you are at a beginner level, because I know a lot of my viewers are at a beginner level, the best thing to do is starting off with these key levels and trading from channel to channel and actually understanding how to trade, right? And we'll kind of go through some potential trades that we could have taken, right? So let's look over here, right? So we see that price is breaking down. Okay, price breaks down, retests, right, my key level, right? What I can do is I can either enter over here at this retest. Let's say I'm playing very, very aggressive, because I know a lot of you traders don't want to enter the market too late, right? So let's say we're playing really, really aggressive. I'll put my stop loss just a few pips above my my take profit, my target, my entry point, right? Then I would target the area. Okay, now in this case, price didn't actually hit my key level, but it hit the area, right? And then this is a nice 1-to-4 risk to reward ratio. Really, really nice. We get into profit, we get back into drawdown a little bit at entry level, then price, smashes down to our key level. Okay, again, looking over here, right? Price is just crashing down. Bearing in mind, guys, I would usually I would enter in the 15 minutes, right? So if I was entering in the 15-minute market, you can clearly see that we could have entered right after that reversal candlestick. We had kind of like 2 reversal candlesticks, right? Stop loss could be right above these highs, giving us still almost a 1 to 3 risk to reward ratio. Okay, so looking again, right? We'll go back. We wait for price to come to this channel, breaks through the channel, retest, right? Retest these lows that it broke, right? Retest these lows that we've just broken. Okay, if you guys can see that. What do we then do? We then place a sell, because we know that there's a lot of bearish pressure, because we know we can see by this trend line that we've created, right? A lot of bearish pressure. Price, bounced off, broke a key level, right? So first confluence is downwards trend line. Second confluence, we just broke a key level. Third confluence is a retest with the lows that we've created, right? That's 3 confluences that you can enter in the market. So we would then sell. Now you can be very aggressive, or you can be kind of conserve. Let's just say we're aggressive because we're trying to grow our account. Take profit 1, hit, right? Now in trades like this, where we know that, last time price reached this level, if we go back, right? Last time price reached the level, it went to this level, right? Last time price went to this level, it's been quite a good support. So we actually don't have the confirmation that price could be heading down, right? But then other than that, right? Then we have a double bottom in this area, right? Price unfortunately didn't touch my key level, so that's not a confluence, that's not a reason for me to enter, but we can see a double bottom. We then see price going up, refuse to break this level, meaning that we're potentially still in a downtrend, right? We then wait for price to break. You can clearly see price broke, very, very strong bearish candlestick. Price retested, but it hasn't retested the lows. The previous lows is all the way over here. Okay, so what we're going to do is wait for price to retest these lows. You can see price retest these lows. Let's say we're playing aggressive, right? We sell over here. Let's say we just sell in this, right? Stop loss above these highs, because we have to now follow these highs, right? Take profit all the way down here, giving us a 1 to 2 risk to reward ratio. Is all right trade, right? We then have a look, see the way it plays out, and boom, take profit has hit. Okay, and you kind of now get the gist of just trading based on this, right? Again, price has done a double bottom, actually a double bottom right here, right? A double bottom, I would instantly enter. Number 1 confluence is price has done a double bottom, right? Reversal formation. Number 2, price did a double bottom and retested over here. Retested my double bottom, okay? So we'd most likely enter over here, okay? Number 3 is price has broken structure. Price has broken these highs, okay? Number 4 is price is at my key level, okay? Is reactive at my key level. So we would buy it over here. Stop loss, we can actually keep it below the lows, giving it a nice sniper entry, and then take profit at the key level, the next key level that's there, giving us a nice 1 to 4 risk to reward ratio. Really, really good trade, okay? Again over here, price reacts. Okay, this is actually live, guys. So price reacts, price then retests. This was the influence of the news, fundamental analysis, guys, right? We then, let's say we then see, okay, price is basically, let's just say we enter around here, stop loss just above here, take profit at the next key level, giving us a nice 1 to 3.59 risk to reward ratio. And we'll wait for price, right? Because we entered right here, we wait for price to go to our take profit, okay? If you want to be more aggressive, you could have easily put this take profit right here and still hold the trade. Me personally, I like to trade from key level to key level because I'm in and out of the market. It helps you grow the account. If you're trying to get funded, it helps you grow this account as well. Okay, so what we're going to do now is, because I've kind of broken down GBP, JPY to you guys very, very thoroughly, okay? I've broken this trade to you guys very, very thoroughly. I want to now look at other trades, okay? I want to look at other markets. And this time we're going to do it without these color coordination channels. So you guys can clear up your charts. You guys can, have charts as clean as mine, right? Like this. As clean as mine, and have, 1, 2, 3 profits, right? I don't think I took any more trades, right? 3 back-to-back profits just based off key levels. Remember, guys, make sure you do have the confluence as well when you're trading. This is not cherry. I do understand that because it's a video and I just put up, it does look like it's cherry picked. It's not cherry picked, but you could say so. If you do believe that it's cherry picked, try out the strategy for yourself. Try out using key levels in your own trading, and let me know in the comments down below. I've been using key levels for the past 3 to 4 years, so for me it's worked. If you're a trader and you don't use key levels at the moment, best thing to do is start using key levels and clearing up your charts, right? Clearing up your charts, because you have one level that is support and resistance, supply and demand zones. Let's look at, I know you guys want to look at gold. We will have a look at gold, but before that, let's look at a currency pair that actually has, like this, for example, 1.09, right? And I was actually doing this with one of my students. Okay, so if I just remove this, let me just clear the whole chart, remove ones. Okay, cool. So with this, it's a little bit different because you can't do 1.09 and then 1.08, right? So let me just show you an example, right? So 1.09, right, and then 1.08, right? Now, as you can see, guys, like this is a very far. This is very far, right? And if you have a look, it is 100 pips, right? It is around 100 pips, but it's quite far. So how would we implement our levels on here, right? Because do I want to trade from this to level? You can trade 1.09, then 1.10, right? And because price is you can see that price is actually heading, it is on an uptrend. We want to see what price reacts to, right? We can actually do this, to be honest. 100 pip distance, right? But if you want to confirm more trades in this kind of trading, we would then have a halfway level as well. You don't have to trade with this halfway level. You can trade the full, but having this halfway level will let me know that, okay, I can trade between 50 pips, right? Euro USD moves a little bit more slower, so I can actually confirm 50 pips rather than the 100 pip mark, right? And then I can do the same thing over here. Okay, so again, we're going to try and locate and see which areas are good. So at the moment, we're on an uptrend, right? So we wouldn't need these lows, okay? Unless price breaks this low, then we'll create a low. At the moment, we don't need these lows, right? At the moment, we're going for 1, 2, 3, 4. Again, what we can do is I can color coordinate this for you guys so you guys can understand. So let's color coordinate again these different channels, okay? Let's make this yellow. Let's make this orange. Let's make this one red. Let's make this one red, guys. Okay. Red. Okay. And let's just rewind it back. We don't need to take it too far, to be honest. We can take it to where price is, right? But it doesn't have to be too far. Okay, cool. So again, understanding each key level, right? This time we've got halfway levels, right? So to be honest, we only are going from 1.10 to 1.9 to 1.08500, right? These are the levels we're trading at the moment. We can clearly see an uptrend forming. We're now seeing some sort of retracement, right? Now, as a trader, you want to know how to trade, right? You want to know where price is going. So based on the history of the market with these channels, you can see that when price gets from yellow area, it likes to go all the way down to red. When it's in orange, it likes to go to yellow. Quite a lot around here. Over here is in red. It hesitated quite a lot. When it's in the red zone, you can see that it barely touches orange. But now you can see that over here, when it's in red zone, it touches orange. So we had a spike to yellow, but we haven't had strength in yellow, meaning that price could potentially actually be going in a downtrend, right? Price could actually be going downwards and breaking this level. So what I would like to see is, I want to see a reaction here. This one would be a little bit more different, right? Because I want to see a reaction. Two ways price can go. It can either, bounce and, go to my yellow zone, or it can break, retest, and then go to the bottom of my red zone, right? These are the only two ways price could, move, right? You need to understand that as a trader, is you need to understand that price only moves in these directions, and you want to be part of one of this direction. So you need to calculate your confluences, calculate, your risk, calculate which one's more or higher probability, right? In this case, right, because you can, if we scale in, you can actually see that price is actually creating, a counter trend, right? We're going on an uptrend, but price is actually creating a counter trend, right? So we can actually just draw this trend line right here. Boom, A, B, right? And then C is the break, but then we also have like a counter trend line here. So A and B, right? So I'm waiting for one of these trend lines. So this trend line has already been broken. So we're looking for a price to retest. So price is most likely going to go up, which could trap the SMC traders, right? Trap them, because that's how they would trade, right? Break, retest, and come down, right? We would then enter at this retest because we see the bigger picture, and then end up trading that sell, right? And end up trading that sell towards the downside. So I'm waiting for price to do that. But the only way I can confirm that price is doing this is if it breaks this level first, goes up, right? So what it has to do, okay, so what we're expecting as a trader, right? So me trading for 4 years, right? What we would most likely see is price breaking this level, coming up, and then coming up like this, and then crashing down like this, right? Now let me make it black because I know you guys cannot see that. And like that. So this is what we most likely could see price do. Price come down, come up, retest here, come up. This is where a lot of people would buy, right? It's a trap. It will give them that movement, right? And then it will crash down with no retest whatsoever, okay? Because this would be that retest. This would be that retest to the upside, right? So having an eye on this kind of trade as well. Again, waiting for price to, show me that strong bearishness. Instead of entering the market over here, right, we would actually move our entry to over here, right, because then that will give us a nice entry point and then a target all the way down here, okay? And then obviously the stop loss can be wherever the previous highs was, okay? And then that's how you basically mark up the Euro USD and how it's different to a normal market, right? Now with me, I like to do my key levels 50 pips or 100 pips apart. I wouldn't do any less than that unless we're trading in a higher volatile market, for example, gold, which you're going to be heading down right now, okay? But before we head down to gold, when you become more experienced, guys, you can actually just remove these channels to make it easier for you guys, and actually just keep a, you can actually keep just an area right around over here, right? So that then you can just trade between supports and resistance, or area to area, key level to key level, right, like this. Now this is how you would analyze a market, nice and clean, understandable. You can see as you've got the uptrend, you've got the counter trend line, you've got potential movement in the market, waiting for that, and then you can also draw in your what's it called, fair value gaps, right? So we actually got a fair value gap right here, boom, boom, like this, which would actually be very, this is a bearish fair value gap right around over here, right? And then you can actually just draw in your fair value gaps wherever you see any, draw in your fair value gaps. We got one right here, so what would be quite nice is to see price get to this area again, and if you are being quite aggressive, you can actually sell in this area again, waiting for price to react to this trend line. So most like, trading right here with the trend line, and then obviously trading at this, and targeting tape off for 1 on this key level, tape off for 2 at this key level, which gives us a nice 1 to almost 10 risk reward ratio. Again, a very good trade. So that could be your potential setup. Number one, you got price, faking, it's gone down, broke a structure, right? Number two, confluence would be the smart money trap, right? Go up here. This is the smart money trap because we had break a structure, comes back up, retest, higher high, low, higher low. People are going to buy around this area, go up, trap these traders, give them that movement, come over here to our fair value gap, hopefully reject. Once you see that rejection, number 4 would be the rejection. Number 5 would be the trend line bounce, and then We then sell. Once you see all those, that's 5 confluences, and then take profit 1 and take profit 2, giving us a nice 1 to 10 risk to 1 ratio. Okay, guys? Now, we're going to now look at gold for the last 10 minutes of this live stream. We're going to be looking at gold, okay? And gold is a little bit different, okay? Gold is something that I do like to trade as well, and we're going to break down gold as well, just with key levels, okay? So we look at what price is doing. Price is at 2160 right now, right? So we want to basically draw key levels 50 pips apart. Now, 50 pips on a market like this is very, very different to 50 pips on like Euro USD, which is quite large, right? I'll show you 50 pips on this market, right? So it's kind of different, right? So 50 pips is like around, 50 pips is very different. The pip count is very, very different here. But the way I do it to make it easier for myself is I would, sorry, let me just mark up a level. So let's just do 2150, right? 2150. Okay, like this. Oh, 2150, like that. Okay. Then what I'll do, my next level would be 2160. Okay, 2160. Now, let me show you guys something. Okay, this looks like a really, really small area. Bearing in mind we're on the 1 hour time frame, right? Very, very small area. But guess what, guys? This is, with my calculations, just pips. There's 100 pips right there, right? So with this one, I like to trade 100 pips, between 100 pips. Smaller channel, more volatility. Okay, so this one would have a bit more than just 3 channels, right? So you can have then 2170. 2180. Let's just draw all the ones that we know. 2180. This is 2150, so the next one after this is 2140. And the next one after that is 2130. Okay, let's just do that. Right, so we've dissected the markets. Again, you can actually color coordinate it again if you would like. You can color coordinate it. It's up to you. Is literally up to you guys. If you would like to color coordinate it, by all means color coordinate to make it more easier with you for channel to channel, right? But with me, I wouldn't need to go this low at the moment, right? But with me, I would have a look at this, right? And then with gold, I'm a little bit more of a different trader, right? So I like to, scale into the 15 minutes this time, see what price actually done between these key levels, right? So again over here, like you can clearly see, clear as day, right? The price gets this key level, reacts, goes down. Price gets this key level again, reacts, goes up. Price goes to this key level, reacts, goes down. Price goes to this key level, reacts, goes up, right? Pretty clear. Again over here, price reacts, retest, goes up, right? Price reacts, goes up, retest, goes to the next key level. And these are 100 pips, by the way. These are 100 pip movements. So if you're a trader that wants to catch 100 pips, these are pretty quick, by the way, guys, right? This 100 pips, right? If I just get a date range, so you can actually see date range would be here, date range. So from like this point to this point, right, is, well, technically I did it in 15 minutes, but let's just say with the candlestick confirmations, 45 minutes, guys. 45 minutes of 100 pips, right? So gold, that's why I like gold, because gold actually does them kind of movements, and it's very easy to understand them when you've broken down the markets like this. So you know that 2160 is quite reactive. Every time price tried to touch 2160, it went right back up, right? Previously, it's been quite bullish around this trend. So and we are also in a bullish market. If you see the 1 hour, we are in this bullish market. So what I would do is I'll see the start of this big, huge leg, right around here, and I'll draw a fib as level. Now, if you guys don't know how to do Fibonacci retracements, I will do a live stream on that as well. That would most likely, I'm not too sure which one it would be, because next week, Technical Tuesdays, will be key levels, but quarter levels with the key levels. So that one is next week, guys. But just based on, I think Fibonacci will probably do the week after that. So make sure you stay tuned for that as well. But with the way our Fibonacci, you can see our Fibonacci lines up exactly on 1, 2, and 3 of our areas, key levels, right? 3 of our key levels. So that confirms to me that any of these 3 levels could have a reaction for price to go up, right? So we then, let's just draw support and resistance. support and resistance over here. This case is, you know, support, resistance to support. Over here, I can actually remove this now. Over here is also our 50 extension, right? So this is the 50 extension, 61.8 and the 78 point, let me have a look again, sorry. Was that the 78.6? Yeah, 78.6, right? So you can see that clear as day, right? That these levels are very, very valuable. They're very, very powerful numbers, right? So not only do they match our key levels, it matches our Fibonacci levels. So that's already two confidences right there when price is reacting. Now we just wait and see how price reacts. We can scale in, see a a strong reversal candlestick. At the moment, it's looking very, very bearish. I'm gonna wait. Price could potentially come down, right? Or it can just crash up, right? It could just fly high, right? Again, you just want to wait for either fundamental news backing of that, or even just looking at structure, market structure, right? Looking at how the way the market's moving. We know that if price breaks this level right here, we know we're going to be quite bullish, right? If price breaks these highs, we know we're going to be quite bullish, right? So what I would actually do is, if I'm trying to mark this area, right? If price breaks this high, so I'll put this as market high at the moment. Text market high. It's in white. Let me put it in black. Market high right there. Okay. If price breaks, let's say, this kind of structure right here, right? Price breaks this kind of structure right here, then most likely we would see market high getting touched, right? So that would be an area that I'll look at. Just breaking down the areas. At the moment, we can see that price is over here. It's quite strong bearish candlestick in the 1 hour. So most likely price would come to one of these levels. You see it was quite resistant. It was quite weak in this area right here. This area is very, very weak. This area is also quite weak. So we're just looking at price, where price could be heading. Now let's have a look at some fair value gaps as well. If you guys don't know how to draw fair value gaps, you can also just search up FVG. I like to just use the first one, right? And you can see we've got so many fair value gaps, right? So many, but we want to see which one actually lines up with our key levels. So at the moment, which one lines up? So this one lines up with our key level, but it's already been used. So at the moment, there hasn't been any strong fair value gaps at the moment. If we go back on the 15-minute chart, you can actually see that price could be heading up, but it could go down again. If you want to trade fair value gaps, you can actually see over here that price could actually retest 71.70. So if price gets a fair value gap, you know that because it's quite strong, price would be going back to 71.6. 2160 or 2150, right? And just mixing and matching different market technicals will help you so much in your trading game, guys, because that's how you dissect the market. That's how break the market into channel to channel and actually help understand the market. So we are near the end of the live stream, guys. I hope you guys enjoyed this live stream. I hope you guys liked this live stream. If you are new to my live stream, make sure you guys like this video. Okay, make sure you guys like this video because it's Technical Tuesdays, and I'm actually just gonna edit the thing to breakdown of key levels. Okay, that's what we're gonna say. We're gonna name this title of today. Okay, guys. So again, if you guys are new to this live stream, make sure you guys subscribe. Firstly, subscribe to the live stream, and also like the live stream if you guys are enjoying these type of breakdowns. Tomorrow is the same time, guys. 1 p.m. in the market. It's 1 p.m. London time zone in New York session, in case you guys don't know. And it is tomorrow will be trading strategies workshops. What we'll do is we'll backtest some strategies, we'll backtest some strategies that I use or strategies that I see that other traders use. Maybe learn a new strategy. We'll have a look on YouTube, see what is a new strategy. Probably set up some sort of workshop there. If you guys have a strategy or any methods or methodologies that you actually trade with, definitely comment down below, or comment down below in this live stream so that I can sort that out for tomorrow. Another again, I'm going to do announcements because I know that we have a few new people on the live stream as well. Announcements for MullaFx as a whole. Okay, so we have a MullaFx launch it's coming very, very soon, guys. I really do want to show you the website. The website is looking very, very good. I love the way it is. It's super different to my old website. If you guys do remember the old website, legendary website, right? And this one's a bit more different. This is the academy. It's going to be more educational. It's going to be more community vibes. It's going to be really, really good, guys. I actually can't wait to show you guys the product that we have. But the way it's going to be, the way I have explained, is my students will, so if you're a student and you're watching at the moment, don't worry, you don't have to pay another payment. You will already have access to the MullaFx Academy. If you are not a student as of yet, there isn't any launch date yet. So before any launch dates, make sure you guys, if you want to become a student and you want to have a cheaper price, because I'm just letting you guys know from now that the academy will be more expensive than my student price, my one-to-one student price. So if you want a discounted price and pre-order, so you will have one-to-one and access to the academy, make sure you just DM me, letting me know that you want to be part of my students, and you can have a look at my page. We have a bunch of students making crazy money, a bunch of students, you know, doing really, really, really well, to be honest, in the market. And the students that I have at the moment, again, you guys will be able to have access. And if you are a student or you're a new student, you will also have access. But as soon as that launch date happens, my one-to-one mentoring will stop temporarily. So my students will see a little halt, and everyone will be getting transferred to the academy, where everything will be on the academy. Okay, everything will be running through the academy. So if you do want to go through webinars, if you want to, you know, everything will be via the academy. Everything will be hosted on the academy. So if you want to be part of the webinars or anything like that, or anything to do with educational purposes, if you want to, you know, if you're new to the markets, if you're new to Forex, this academy is for you. Okay, I'm super excited to launch this. Really, really excited to get you guys on board. For all my old students, you will have access to that as well. Now, the second announcement that we have is that we have a webinar on Friday. Okay, Friday's webinar will be at 7 p.m. London time zone. Okay, and we have very limited spaces left. We had around 50 people let me know already. It's a free webinar, by the way. 50 people said on my story on Instagram that they would love this webinar. So I did a forms, and we are limited spaces only at the moment. I don't know if I can get any more, but still try and sign up. If you get the Zoom link, you get the Zoom link. If not, don't worry, guys. I will try and get that webinar. If you missed that webinar, I'll try and email it to you guys if you sign up the form. So only if you sign up the form. So I can't stress this enough, guys. Make sure you sign up the form. The link for this will be either in the description below after the live stream, or it will be, if you can't find it, it will be in my Instagram bio, okay, or my story, whatever one's easier for you. So make sure you go check that out. My Instagram is linked in the description below. Temporarily at the moment, my Discord is paused, and my Telegram VIP chat is also closed at the moment, because we are focused on this academy, which is going to be really, really great. So make sure you guys, you know, stay tuned for that one, and keep subscribing, keep sharing to your friends, keep learning, keep earning. And that is it for today's live stream, guys. Goodbye.